Well, here we are again, folks. Another massive YouTuber just sold out of basically all their stocks. They basically just went all in one stock, as you'll see in this video. They technically are going to hold two stocks. We're going to go through their different points they make in this video. I'm going to give my points against that. I'm going to try to be as respectful as possible in this video. What we're about to get into is a massive, colossal disagreement on many core things in this video we're going to go through. My belief versus this individual's belief. And, let's just jump into it. So Mr. Chicken, by the way, I'm not calling him a chicken because he's selling out of his stocks. And Mr. Chicken, I'll address him as, because I've seen, several of his videos over time. And, I thought it was surprising he made an 11-minute video, because most of the videos I've seen over time have been like 3-4 minutes. And, massive YouTube reach. This is 146,000 views. And, he just sold out of these stocks or going to sell out of his stocks, but that's a massive, massive reach. Okay. So it's not like this is some niche person in the stock market space or something like that. That's crazy views. That's all I got to say about that. And so let's get into this and I'll give my opinion on this and we'll hear what he has to say.
This video will not be easy to make. I know a lot of people is going to watch this. I'm selling. But not everything. I may very well regret the move I'm going to make. But as usual, I'm always transparent. It's not easy, Imagine being judged for every move you make.
As we get into this video, it would be better. It would literally be not just better. It would be 1,000 times better if he wasn't transparent, because the transparency is going to make so many people make such horrible decisions with their investments over time. It's sad. That's all I'll say about that. It's sad.
But I'm letting you know in advance the plans for my portfolio. You will need to take notes, as this video is super packed. Right now, we are in the eye of the storm. It seems all calm, but it's going to take a turn for the worse. I've always been...
Ooh, okay. We already got something juicy here right off the bat, okay? Let's talk about being calm, okay? Let's get into this. Nasdaq's in bear market. Russell's in bear market. Sentiment's in a bear market right now, right? More people bearish on this market than bullish and neutral combined, all right? All European indexes have either gone into correction, crash, or bear market now. All the European indexes, okay? The Asian indexes are awful. We see in the market right now a time period where just about every single retail trader investor stock is down between 50% and 95% from where they peaked out in 2021, okay? We're seeing massive companies, PayPal's and Meta's and Facebook, like these massive companies sell off huge, like 50+% drops in a snap of fingers, okay? So this notion that everything seems calm right now is the furthest thing from truth, because that's not factual. What we look at in the stock market, it's ugly out there, and it's been ugly out there. And it's just gotten uglier and uglier and uglier. Unless you're in all oil and gas stocks right now, and maybe a few of the biggest big caps or something like that, maybe some healthcare plays. Outside of that, it's been devastating, this market has, okay? So let's not act like we just been, so perfect or something. It's been
relax
awful
about the markets. And as far as I recall, as I said this many times, short of a war, the market is going up. Who the hell in 2022 predicts a war breaking out? It's unthinkable, and I spent all my brain...
I would not call it unthinkable whatsoever. Like, have you ever seen history? Have you ever picked up a history book? Like, this stuff happens all the time. Like, this is not unthinkable. I think what happened in 2020 was much more unthinkable than this, a once-in-a-100-year pandemic, because that happens every 100 years. Wars! Give me a break, man. You could be flipping my flapjacks. Wars are going on all the time. Welcome to the world. Tell me how many pandemics there's been in the past 100 years, and tell me how many wars there have been in the past 100 years. Let's run numbers on that, okay? Wars happen all the time. Give me a break, man. That's just ridiculous.
Resource connecting the dots. And here's my sad conclusion. This video will have 3 parts: assigning risk probabilities to different scenarios, anticipating the sequence of events, and the defensive move I'm going to make.
All right, so right now, he's going to get into a lot of the same stuff that you hear on CNBC all the time. Like, put on CNBC for 5 minutes. 5 minutes. Here's what you're going to hear. Russia, Ukraine, inflation so high. How many times is the Fed going to raise rates? Are they going to raise it 5 times, 7 times, 9 times? All right? Like, how aggressive are they going to move? You're going to hear about the possibility of a recession. You're going to hear about that, right? And you're going to hear about commodities going up. Those 5 things, and they'll be regurgitated over and over and over and over again. And that's what every single person on Wall Street knows right now. Every single person in the market knows of those things, okay? So that's not like some like earth-shaking like view or something like that. Everybody knows about that. It's all bad, and that's why the Nasdaq's gone into bear market, right?
In geopolitics, it's a really difficult game to predict. Here we are dealing with individuals. The first thing to do in geopolitics is assume everyone is wrong. There's massive amount of propaganda on both sides, so no one really knows the truth.
So Mr. Chicken, he makes some good points that I agree with. Yeah, it's definitely propaganda on both sides, and there's definitely a lot of points we agree on. But there's some core principles that do I see the opposite.
But there are some known facts. Putin can't go home without some kind of victory, and Ukraine lost so much they won't accept any sort of deal Russia puts out. So cutting the story short, my assumption is this war will drag out for a long time. Experts on this topic has assigned this outcome as the highest probability.
Yeah, rule number 1, never make a buying and selling decision of your portfolio or to go all in one stock based upon your assumption on how long a war will go for. Just trust me on that, because Mr. Chicken has no clue. I have no clue. No one has any clue. The war could wrap up in a week, a month, a year. It could still be going on 20 years from now. It could be an ongoing conflict that's just like, wow, that's still going on. It's 20 years in the future. Like that's not even a guess. I wouldn't even call that
the
a
next assumption,
guesstimation.
The price of commodities.
Just a pure
These
guess.
are the known truths. 20% of high-grade nickel comes from Russia. Europe gets 40% of the gas from Russia. Putin could use this as a weapon. See, oil now is over $100. And my assumption is commodity price will remain high until the world kind of build infrastructure independent of Russia. And this takes about 3 years. For me...
So 3 years, commodities super high. Dude, I can't predict commodities. I've been doing this for a long time. I can't predict where a commodity is going to be next month, never mind a year from now, never mind 3 years from now. Oh my gosh. If Mr. Chicken can predict where oil is going to be 3 years from now, he is the biggest genius in the history of the world, because I have no clue. Honestly, he has no clue, and no one has any dang clue where commodities will be a year from now, 2 years from now, 3 years from now. Give me a break, man. Even oil pulled back recently. Let me show you something here. What you're looking at here is oil prices. I mean, they peaked out at 130 a few days ago, and actually since then they've been in a downtrend, which has just baffled everybody. Everybody's like, what? Like, oil was supposed to keep pumping. What's going on? And not literally, but figuratively at least. Like, what? Oil's going down? What? I thought it was going to keep going up. I thought we were about to hit 150 and then 160 and 170, and now we're at 105? Well, what's going on? That's like commodities, dude. Yeah, if you're making buy, sell decisions to sell out of your whole account and go all in one stock based upon commodity guessing of where it will go over the coming years, that's a bad game, man.
And in this probability, Russia's economy is worthless now. Putin's position of power is diminishing. He could very much cut the supply of oil and gas to Europe, and this will bring Europe to its knees. If I were Putin, if I were pushed to a corner, I would do it. Wouldn't you? Next assumption on inflation. These are the known truths. One, inflation appears under control just before the war. And two, if the war goes on for long, inflation will go out of control. Remember that CPI is a lagging indicator. So in November 2021, there were signs showing. But 3 months later, the Fed decided to act. If inflation continues to go out of control, the Fed will need to raise interest rates dramatically.
No, that's not how this works. The Fed's going to look at everything objectively. And if the Fed sees, let's say, inflation going crazy because oil's spiking, let's say oil continues to spike, right? which helps lift up the inflation numbers. The Fed could very easily look at that and say, we're not going to raise because oil is going up. Because if the Fed magically raises rates, it's not going to magically help the oil price go down. The Fed's a little more intelligent than that, okay? The Fed's also not going to go insane with raising rates to like these crazy numbers some folks have, like, they're going to raise to 5% or 7% and snap a finger or something like that because of the debt situation. But also, you think they want to crash the economy? No. Listen, the Fed works for certain people, okay? And those people are in office, all right? And you could act like they don't really have a boss, or Jay Powell doesn't have a boss, but believe me, there's people driving this train. And those people will get voted out of office if you go into any sort of massive recession, obviously, right? And so, this thought process, like the Fed's just going to raise, or no, and believe me, if you want to even think about the concept of like ever going into a recession or something like that, believe me, in that sort of environment, the Fed's not raising rates. They look at that and they'd be like, we're not going to raise rates. If anything, we're going to bring back rates. So that's a situation some people just don't get. They don't understand this concept. That is the simplest concept. If the recession fears go up and become something real, right, and you actually get close to a recession, the Fed's not raising rates. If anything, they're going to drop rates or keep them like level, at like worst case scenario. But more than likely, they're dropping in that sort of scenario. So that's just the way it works. Now, if the economy stays strong, sure, they can raise rates. Perfectly fine.
Next assumption, the Fed is screwed both ways. If interest rate goes up slowly, inflation will be out of control. But if they raise it by too much due to the large debt that US holds, most of the
It's just so funny everybody talking about inflation, because I was talking about this on Millennial Money like a year ago, when we were doing that show. Like, I was talking about that in like spring of 2021 and how inflation was so much worse than the Fed seeing, and what, no one was even talking about inflation at that time. It was like a mute subject, right? And I was talking about how I see it in the real world, and like, people that I know that run businesses, small businesses, are seeing it in a real way. And then finally people started to pick up on this as we went later into 2021. And it's just so interesting to see how wrong people are when it comes to inflation. And now this expectation that inflation is going to just stay massively out of control or something like that, which I think is interesting. And I just don't have that view at all. And regardless if that's true or that's not true, that's still not even like the core point we're going to get into in this video, because that's what I call a minor mute point, actually. Whether you believe inflation is going to stay high or not high, or start to fall in the back half of the year, that's all child's play from what we're going to get into.
Budget will be spent paying off debt. It is an unlikely scenario, so there will be no soft landing here. So wrapping up the assumptions above: 1, the war will drag out. Number 2, the price of commodities will stay up. Number 3, inflation will be a problem. Before this war, again, I didn't think it was a problem. Nobody expects a war. And number 4...
If you didn't think inflation was a problem before this started, oh man, I'm going to be nice. I'm going to
screwed both ways. With all 4 assumptions, this is my assessment. It is a risk-on environment. From now to mid-year, it's going to suck.
No. What he means is this is a risk-off time period. Risk-on means everybody wants to take risk. Risk-off means no one wants to take risk. Okay, so you used the wrong term there, but that's all right.
I didn't think it would come this soon. And I really don't see a way out of this. Anybody, if you have an opposing view, please explain in the comments with some sort of context. Please be careful of scammers. Before I share my plans, I'm not telling you to sell out your stocks. Tesla and Palantir, both are great investments. For Tesla, I think that 2 trillion, easy. 4 trillion, 2025, easy. What?
Oh, gosh. Listen, man, I'm a Tesla bull. Everybody knows that. Was talking that company up in 2018, 2019 on YouTube when no one was around, right? Other than maybe a Galileo over a hyperchange. And, all these people have come out over the last, year or two out of nowhere and are all of a sudden Tesla bulls, and that's fine. But I'll tell you, it's not going to be easy for Tesla to get to 2 trillion or 4 trillion. I can tell you that. It's possible, but I would call it anything but easy, okay? Anything but easy. Never mind if you point out a doomsday scenario that Tesla would get hit in that scenario as well. So, this is another false assumption that it's easy 2 trillion, 4 trillion. No, it's possible if Tesla executes on a very extremely high level and we don't go into any major recession over the coming years and interest rates stay fairly low, so Tesla can continue to sell a lot of cars because interest rates are really low. If all those scenarios play out, it's possible. But I will tell you, as a Tesla shareholder, that is not easy at all. Okay? Let's be very, very clear about that, and let's set our expectations somewhat realistic.
Trying to tell you is holding power, conviction, and knowledge in the companies that you invest is key. Else, you're going to get a mental breakdown when price drops. Reduce leverage in such times. It's always that spike downwards that wipes people out.
Okay, so leverage usually isn't, and what he means by leverage is like margining out money and stuff like that. It's usually not a great thing for almost all investors, but certainly not folks that aren't experienced in the market. That's even more dangerous. But what I will say about, what do we know? When the market's in bear market, you're in a crash, be more aggressive in the market. When, let's say the market's flying high, be less aggressive, right? Because you know that ultra bullishness and that FOMO is going to end up fading. And just like eventually the bearishness ends up fading, right? And so, it almost sounds like the way he puts it there, it almost sounds like he's saying, in a different market where everything looks good and the coast is clear, you can go on margin or leverage or something like that. And I would say that's the most dangerous market. If you're if you went back a year ago or a little over a year ago, go back to January 2021, right? When a lot of stocks were flying high, the market was flying high. A lot of folks could have, obviously went super heavy on margin, right? And all to see stocks fall 50, 60, 70, 80, 90% plus, your account's done. Your account's done in that scenario. So the last market I would ever want to be super leveragey in is a market that's at peak. Let's put it that way. Peak indexes, peak stock, peak FOMO, that's a very, very dangerous game there. So let's be very, very clear about that.
Not the time to take that kind of risk. If you want something extra, this is what I'm going to do.
This is his plan. Okay?
I have 2 portfolios I share openly. I have a portfolio playlist for full transparency. I do not touch an itchy fingers portfolio. This is my weightage for Tesla and Palantir in my do not touch portfolio.
Okay, so essentially, he's almost basically all in Tesla stock. Okay, let's call it what it is. He's technically got 2 stocks, but run the percentages on that. You're basically all in Tesla. Okay, so here we have a scenario where Mr. Chicken is talking about. This is why I say it's better that I wish he was completely private, because it would literally do people a better justice by just keeping this on the DL. If you want to go all in Tesla stock, don't freaking tell anybody. If you want to sell out of all your other stocks to try to time the market, don't tell anybody, because at the end of the day, people follow actions more than they follow words, right? So you say, well, don't go all in Tesla stock and don't, No, okay, here's the thing. We're going to, in the YouTube community, we're always going to have disagreements on stocks. Oh, that's a bad stock. Oh, that's a good stock. Oh, you shouldn't be investing that heavy right now. Oh, you should be investing heavier right now. Everybody's going to have different opinions on that. But there's 2 core things we usually almost always agree on. Don't go all in a stock, which he's basically got almost his entire portfolio in 1 stock now. Okay. And the other thing is, let's think about this for a moment. Don't time the market, because we're told that by every great investor ever. And, I tried to do it in 2015. I was in the market. I was out of the market. I was in, and I lost a bunch of money. It was so stupid. It was so stupid when I should have just been focused on buying dip maybe. In and out. And what do we know that actually works? When the market's going down and stocks are going down across the board, and you got some great companies that are trading at 70% discounts, 80% discounts, 90% discounts, and you're a huge believer in that company and where its revenue growth is going over the next 5-10 years, and where its net income growth is going over the next 5-10 years, and where you believe its PE should be valued over the coming years, that's when you got to buy, and you buy all those dips. And so a year like 2022, where you're getting all these massive dips, that's a year where you got to be a buyer. You can't say, I'm going to sell out of all my stocks, because that's not buying the dip. Buying the, this is where people get so confused. they're like, oh, buy the dip because it's off 4% from its all-time highs. Are you kidding me? You know, that's just, it's utterly ridiculous. It's ridiculous. You know,
selling anything from my do not touch portfolio as I remain bullish long term. For my Itchy Fingers portfolio, I built this portfolio up from 100K to 1.8 million, and lately it dropped back down to 1.2 million. I will clear all my positions in my Itchy Fingers portfolio and use this to hedge my portfolio before the FOMC meeting on the 16th of March, as I see a rally of stocks into March FOMC.
That's a straight trade move. That's a straight trade move there. When you're trying to plan out around a Fed meeting or something or anything like that, or some economic data that's about to come out, that's a straight trade. That's a straight trader move. And I just want to make it very, very clear. There's a huge difference between investors and traders, and we're going to see this we're seeing this right in front of our eyes fully play out. I think a lot of folks, maybe got brought up and people thought some of these folks are investors. No, they're basically just traders trying to, time things out and get in and out of the market and get in and out. This is going to come out. This news is going to come out. Could go down. And Nasdaq might go down 5%, 10%, whatever. We're finding out the truth now.
Since my assumption is a risk-on environment plus increased interest rates plus a powerless Fed, in such environments, what are the assets you can hold? So there are a few main asset classes. There are stocks, there are real estate, there's bonds, precious metals, and lately crypto.
Yeah, so he goes in, talks about bonds and whatnot there, okay? So, here's the thing. Don't time the market. When you get massive dips in great companies you love, you buy the dip. You don't sell out at massive losses on companies you believe in over the next 5 years based upon what you think could potentially happen short term. And I promise you, after all this crap is out of the way, we will have more crap. And after that crap's out of the way, we'll have more crap. And this thought process, like this is new or something like that, we're going to have so many more dramatic things to deal with over the next 10, 20 years. You have no clue, okay? So many things. And what does it pay? Like, if I look at my past 14 years of being in the market, so much crap. So many things to be scared of, to want to get out of the market, to want to try to time in and out because something bad's going to happen, or this is bad, or the market's bad. Look at what Nasdaq's now down 20+%. You look at all these stocks down. You always are going to have something. And that's just something you got to deal with in the market. And so a year like this, 2022, I look at this as like a buy. And if stocks go down this entire year, sweet. It's a load the boat opportunity for an entire year. But you don't try to time in and out of that to play it in trying to get in. Because what we see consistently from folks, right? I experienced this myself. And everybody I see does this essentially, that tries to time in and out of the market, is they'll get out of the market. Next thing you know, they're back in the market. And then all of a sudden the market will go down more or something like that. And then all of a sudden they're back out again because they're like, oh shoot, stocks are going down. Why did I get back in the market? I got back in too soon. Then the stock market starts to go up. And they're like, no, it's probably going to go back down. And then it goes up more. And they're like, no, it's probably going to, and then it goes up more. And they're like, oh shoot, I better get back in now. And it's such a waste of time. And it's not the way you do this game. You keep it simple, man. You run your projections on where you think companies' net incomes are going over the coming years and what you think command for valuation based upon P metrics and what it will command in future years, okay? And if it's a great deal, you buy the stock, you throw it in the filing cabinet. And if it goes down, you buy some more and you throw it in the filing cabinet. And you say, screw the rest of it, the meetings and this and the drama and all that stuff. And at the end of the day, if stocks drop a bunch, you buy the dip, you buy the dip, you buy the dip. And you don't try to time it out because that's a losing game and it'll put you more into a mentality to try to time that out. And just if, you are so fortunate that you sell out of stocks when the Nasdaq's down 21% and you jump back in, let's say the Nasdaq goes down another 10%, next thing you know, the Nasdaq's down 31%, you jump back in and then it starts going up right away. That is going to lead your head to get bigger than the biggest head in the world because you're going to now think you're a genius and you can keep time in the market. And that's a well you're going to try to go back to again and again and again. And it ain't going to work out, man. And, that's the name of this game, okay? Alrighty, guys. That covers that, man. It's unfortunate. It's unfortunate. That's all I'll say. It is what it is, It is what it is. Much love and have a great day.